negative flow on GDP and steps taken by the Indian government on fiscal consolidation, how serious is the risk of a rating downgrade for India?
I do think it is reasonably serious. We would still attach a 50% probability that India does get downgraded by a notch. The reason for it is that if we look at the current pattern of fiscal consolidation, it's really coming through a squeeze in capital spending. Now, clearly the rating agencies want to see a much more durable fiscal correction, which involves a clear reduction in subsidies and enhancement of the revenue base, and that's what we are not getting. We are getting the headline number, but we are not getting a quality adjustment in the fiscal accounts.
Given the recent depreciation in the rupee and the high trade deficit expected in May, do you think there will be any rate cuts by the RBI in June? What are your expectations?
Well, first of all, let me say this, that the depreciation of the rupee is not something that's unique to India at this point in time. It's really the impact of a strong dollar that's sort of taking shape globally. The second point is that when we look at the trade deficit, clearly I think that when you have a weak rupee, etc., it obviously has an impact in terms of the rupee deficit. It also has an impact in terms of inflation. But at this point in time, what's interesting is the commodity prices are also coming off. So it's not as severe as what you would have expected a year ago in terms of its knock-on impact on the economy. In terms of rate cuts specifically, we're looking at 75 during the course of FY14. We do think perhaps a 25 basis points reduction in the CRR is possible, but I think more likely you will see is a reform of the financial system. By that I specifically mean that the government is maintaining huge cash surpluses, which are a drain on liquidity, and at the same time banks are borrowing very heavily from the RBI. So there has to be some kind of a structural resolution to this issue.
Earlier when we spoke about the rupee, we talked about the dollar strength. Do you see the rupee falling below 57 to the dollar? And what are the implications of a weak rupee on India's macro fundamentals?
It obviously is possible in this environment. We simply don't know whether strong dollar, how long it would persist. I think the signals are fairly mixed out of the US. Some data points are getting stronger, some are getting weaker, but most of all, I think Fed speak is clearly aimed at preventing another bubble, and that's why they're talking the market. So it is possible in the short term, but that said, this move would probably be not one that you can characterize by fundamentals in India. Does a weak rupee have an impact? Yes, it does, but perhaps not as strongly as it did last year, simply because inflation is much lower at this point in time.
How do you view global liquidity and its economic recovery? Do you think that we may see a decreased capital flows to India given the better recovery in developed countries?
I think we already are in that process. So globally, the economy is staging a modest recovery, if you like, but it does seem that the monetary cycle is getting tighter ahead of that. Of course, there are central banks like the BOJ that continue to sort of pursue a very expansionary policy, but at the same time a good deal of uncertainty has been injected into the markets by the Fed over the last month or so. So yes, I do think it will be negative, more so because the US economy is not at a point where it's gotten into a strong escape velocity. That would have been a good neutralizing factor because India's growth would have picked up much more strongly then. But a lackluster US or a moderately recovering US along with monetary tightening is a problem.